All right, let's dive in. Today, we are taking a deep look at one of the most talked about real estate markets in the entire country, Phoenix, Arizona. We've got the final numbers from 2025, and we're going to figure out what really happened.
For the past year, it feels like everyone's had a hot take. You had the pundits on one side screaming about a crash, and the optimists on the other hoping for another crazy boom. But as it turns out, the data tells a much, much different story. Let's see what actually went down. So here it is, the big takeaway right up front. Instead of those wild swings everyone was predicting, the real story of Phoenix real estate in 2025 was all about resilience. It was about balance. It kind of defied everyone's expectations, really. So let's break down exactly how we got here.
Okay, so first up, let's talk about the money, the prices. I want you to forget the roller coaster we've seen in previous years, because 2025 was defined by something else entirely, a steady, predictable plateau.
This right here, this is the number that tells the whole story, $450,000. Now, what's absolutely incredible about that number is that the median price basically held steady for an entire year. It's like the market just found its footing and decided, yep, this is where we're going to hang out for a while. Now, this is where it gets really interesting when you dig into the details. You see that the median price was perfectly flat, 0% change. But then look at the average sales price. It actually ticked up by about 1.5%. So what does that tell us? Well, it suggests that the high-end luxury market was still buzzing with activity, and that pulled the overall average up, but without messing with that stable median price for the typical home. Pretty fascinating stuff. And this quote just brilliantly captures the historical significance of all this. Experts are calling it a controlled plateau. Think about that. Unlike the absolute catastrophe after 2008, where prices fell by more than 50%, this market just eased into stability. It navigated high interest rates and all kinds of economic uncertainty with, honestly, surprising grace. Okay, so prices were stable, but what was actually happening with the number of homes for sale, and more importantly, the number of people out there buying them? Well, that brings us to the really critical dynamic of supply and demand. This chart tells the whole headline story for the end of the year. Look all the way over on the right. See that green line? That's the supply of homes for sale, and you can see it taking a pretty sharp dip. Now, at the exact same time, look at what the black line is doing. That's demand, the pace of sales. It's shooting straight up. That crossover, that inverse relationship, that is the classic sign of a market that's gaining some serious momentum. Let's put some hard numbers to that chart. What you're seeing here is, first, on the left, the supply of homes tightened to just under 3.5 months' worth. That's getting us closer to what we'd call a seller's market. At the same time, over on the right, the absorption rate, which is really just a fancy way of saying how fast homes are selling, hit nearly 29%. That's the strongest it's been in over a year. It means almost a third of all the homes for sale sold in December alone. Wow. And if you need any more proof that demand was real, here it is in black and white. The actual number of closed sales jumped by over 14% compared to the year before. This isn't just some seasonal blip, folks. That's a huge increase in the number of deals getting done, and it shows that buyers are out there, they're active, and they're making moves with confidence. Okay, so we've got stable prices and rising demand. But how does it actually feel to buy or sell a house in this market? Well, the answer really lies in the pace. Things have become a lot more deliberate.
First, a real quick definition so we're all on the same page. When we talk about days on market, or DOM, we're simply talking about the time from when a house is listed for sale to when the seller accepts an offer. It's the key yardstick for how fast the market is moving.
So the typical home took about 63 days to sell. Yeah, that's about a week longer than the year before. But, and this is important, this is not a sign of a weak market. It's the sign of a balanced one. It's a market where buyers actually have some time to breathe and consider their options, and sellers need to be a little more patient. Those frantic buy-it-sight-unseen days, yeah, those are definitely over. And this really breaks down the tale of two markets that are happening at the same time. The homes that are priced right from day one, are in fantastic move-in-ready condition, and have great marketing, those are still flying off the shelf in under 30 days. But the properties that are overpriced or need a lot of work or have dated finishes, those are the ones that tend to sit, and they're the ones pushing that median number up. So we've looked at prices, supply, demand, and timing. Let's pull this all together. What does this stable, deliberate market actually mean for you, whether you're thinking about buying or selling a home in 2026?
Okay, for buyers, the good news is you have options. The inventory is healthy and you have way more negotiating power than you've had in years. But you still need to be prepared because the best homes are still selling fast. Now, for sellers, the message could not be clearer. Pricing and condition are absolutely everything. You can't just throw a sign in the yard anymore and expect a bidding war. Patience and a really realistic strategy are going to be your keys to success.
And that really leaves us with the million-dollar question as we head into 2026. After a whole year of this remarkable stability, has the Phoenix market finally found its new normal, its long-term equilibrium? Or is this more deliberate pace just to quiet before the next big shift? I guess only time will tell.